Okay, let's not kid. This is not the start of December that we were actually expecting. We were doing pretty well before the beginning of December, and then we had this 7.5% candle on Bitcoin. Now we are getting a slight recovery here, but I want to talk about all the FUD that caused this beginning of a bad December. So when we look at the FUD that came into the market yesterday, we had like three levels of FUD. We had the Japanese interest rates, which potentially are going up. That was the first bit of FUD. Then we had Tether, and then we had the MicroStrategy FUD. Now I want to dig into all of the FUD and discuss whether any of it actually has any merit. Specifically, I want to talk about the MicroStrategy FUD because that's like the biggest FUD on them all. It could be that either the MicroStrategy Ponzi is over or the MicroStrategy FUD is over. And that's what we've got to decipher today. Because if the Ponzi is over, what are the implications? And if the FUD's over, then what are the implications? And both of them play out very, 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 very differently. So that's what today's all about. We're going to debunk the FUD. We're going to talk about what the real FUD actually is and decide how the rest of December is actually going to happen. So as you can see in Dubai, big show for you guys today. Not my normal studio, but here I am bringing you crypto love and crypto wisdom. Tell me in the chat how my sound is. Let me know if my sound is actually good. Let's get the show on the road, guys. I try and never miss a day doing a show, but yesterday it was either miss a day or miss a flight. And so I chose the path that would get me to Dubai for the Binance Blockchain Week. And here I am in Dubai for the Binance Blockchain Week. Now, guys, I must say something to you. You will never, ever hear me talking about a partner in the beginning of a show, ever. But I want to show you something. So I got this Kast gold. Okay, it's solid gold. Right? This card is solid gold. It's a Kast solid gold card. So I've been spending on this Kast solid gold card. Okay, so number one, what happens is it's a neobank. So effectively what it is you're basically spending your crypto on this card and you get back rewards. Okay, so not only is this specific card solid, I wish you could feel it. It's real solid gold. Okay, it's a solid gold card. But that's not the point. The point is that I've been spending on it and you actually get like big amounts actually back. Like you get like 3, 4, 5, I think even up to 7% of your spending back, which means that like when you go and buy a plane ticket from Emirates, which is exactly what I did. I bought I'm not gonna tell you what class I bought, but I bought a plane ticket from Emirates. Like literally you get back like 5% of your money immediately in the gold. It's solid gold, believe it or not. Guys, I don't rave about sponsors and I never, ever do it in the beginning of a show. Trust me, ever. But this was one of the best things that I've ever used. If you want one, there's a link below here. As you can see, it says Kast. There's a link below. Honestly, like I use crypto cards, but this is like a completely different experience. Sign up, get the app. You can manage all your banking on the app. You can manage everything on the app. And it's really been one of the best experiences that I've had with a card. And that's why I have that, like I'll talk about it in the beginning of the show. Someone says first class, Jimmy, you know me too well, bro. You know me too well. Anyway, let's get into the show today. And guys, if you haven't already liked the video, please help me get distribution. Yesterday I wasn't here, so the algo is kind of confused. It doesn't know whether I'm here or not actually here. I want to talk about December because we came into December and we thought that December was going to be the end of QT. We thought that Powell was going to cut QT, and Powell did actually cut QT yesterday, and we thought that the markets were actually going to go up. But instead, when we came back to our desk in December, it wasn't what we expected. In fact, if anything, we got the exact opposite. We got this like mean red candle. And I don't know if you guys were watching the markets yesterday, but the reason why we got, or there were three reasons why we got the red candle. And I want to discuss those three reasons because to each one of those, I have a retort, and I'm going to spend a lot more time on the MicroStrategy part of it because the MicroStrategy part of it is actually very, very important. MicroStrategy could be in trouble. And if they are in trouble, we need to discuss what that means for Bitcoin. And if they're not in trouble, well, then let's discuss what that also means for Bitcoin. So let's start off by actually looking at what caused the FUD. There were three elements of FUD. The first element of FUD was, as I said, MicroStrategy, right? The second element of FUD was Japanese interest rates actually going back up because now Japan's actually talking about an interest rate hike when they meet in December, right? And the third bit of FUD was around Tether. So we had FUD around Tether, where effectively S&P downgraded Tether, And the reason why they downgraded Tether is because of what 𝗙𝗨𝗡 says. And he says, look, Tether's got gold and Bitcoin on their balance sheet. Now, if Bitcoin declines by 30% and gold declines by 30%, then that would mean that if there was a run on Tether, Tether couldn't meet their obligations. And we need to talk about what that FUD actually means. Now, that FUD on the 1st of December actually caused one of the first real big capitulations that I've seen. Now, you know how I know that it was a capitulation? Because there was one token that was unresponsive to the market, and that was Zcash. Remember, with all the market going, with all the negative news, Zcash was the one that was going up and up and up and up. And the reason is that the people that were holding Zcash are the old Bitcoin holders. And those old Bitcoin holders, let me tell you, they're not scared of anything. They've been through multiple bull markets, bear markets, they've seen flushes, they've seen capitulations, and they held. But yesterday when I woke up in the morning, I saw that Zcash actually started to move down. Because as you can see, if you look at my trading view over here, you can see that Zcash is like the number one on my trading view because I took a big position in it, and that's the one that I basically want to look at, right? I'll talk to you about this BNC one later. But I saw Zcash actually went down. And when Zcash started going down, I realized that yesterday was actually a much, much, much bigger event than just what we thought, right? And so I realized that it was a capitulation. And so we walk into December, and this is what December looks like. It doesn't look very good. November was a negative month for Bitcoin, negative 17.67%. We're in the second day of December, and we're down 5% in December, which means so far for Q4 on Bitcoin, we're down 25% on Q4. That's like one of the worst Q4s that Bitcoin's ever had. And to make it worse, that's in the background of stock markets at all-time high, gold at all-time high, etc., etc., etc. So we're starting off the month after quite a bad capitulation. But the one thing that didn't happen is the chart structure didn't break. So I would have imagined with that FUD attack that we had yesterday. Now we'll talk about whether it was coordinated, not coordinated. Guys, I can't stop looking at this card. I just don't know how to say it to you. It's like the coolest thing I've got at the moment. I'm very, very excited about it. Anyway, so we had the FUD, and the FUD didn't manage to break the chart structure. I would have imagined that with Tether FUD, think about this. Tether is the biggest stable coin in crypto, and there's Tether FUD. Then you've got MicroStrategy. MicroStrategy is the biggest buyer of crypto in the cycle, and you've got MicroStrategy FUD. And then you've got, and then on top of that, you've got Bank of Japan, and we'll talk about the Bank of Japan in a second. And so I thought that with all that happening, I thought the chart structure would actually break. And I thought that what would happen is we'd put in a lower low on the charts. But that's not what happened. So what you can see actually is that this was the previous low, which happened on the 25th of November. And then 10 days later, we capitulated again, a capitulation candle. But that one was a very clear higher low. And if you look at where that is, we put in the first higher high over there. So in general, what we're looking for, what we're looking at here is we're actually looking at a market structure which is actually pretty strong. And actually, the market is starting to bounce back pretty quickly because what it's seeing is that this FUD is exactly that. It's just FUD. And I want to break it down. Let's actually go through each one of the FUD points. And let's start off with Japan, because Japan is what actually set this what set this collapse off. If you look at, this is the Japanese, the Bitcoin chart against the US dollar Japanese yen chart. And you can see that those two moved in perfect harmony when the market actually opened yesterday. Why? Because Japan is talking about rate hikes. And yes, they probably will do rate hikes. In fact, the Bank of Japan says they'll consider the pros and cons of raising interest rates at their next interest rate meeting. The probability of those rate cuts currently is at about 81%, right? So there's an 81% chance that the Bank of Japan is basically going to raise rates. Why is that such a big thing? As I've said to you guys before, for years, Japanese interest rates were at zero. And so people used to borrow in Japan and go and invest in the United States. You borrow at Japan for zero interest rate, and you invest in the United States at 5%, and you're making yourself 5% without really doing much. And that was called the Japanese cash and carry trade. Every time Japan talks about increasing rates, the ugly Japanese cash and carry trade rears its ugly head. You remember the last time that the Japanese cash and carry trade came up, we had a massive correction in the markets. Okay, now, this happens every single time. And I think we need to talk about the reality of what's going on in Japan. The first thing is, as the Japanese 10-year treasury yield will tell you, you can see that this chart is going back up. The market is basically expecting that Japan will start increasing interest rates. They're basically saying, look, the days of Japan with zero interest rates, well, they're not going to be here for very much longer. And so the 10-year treasury yield in Japan is basically saying to you, look, Japanese interest rates are going to go up and you're going to need to get used to it. And over a slow period of time, the Japanese cash and carry trade is going to unwind. In fact, this article is quoted of saying that the 75% of the Japanese cash and carry trade was removed the last time that it happened on the 8th of August 2024. I'll remind you what happened on the 8th of August 2024 to the charts. Let's look at the charts here. So 2025, I think it's that. So it is there. That's when the Japanese cash and carry trade unwound itself in 2024. That is the big red candle. That candle over there is when the Japanese cash and carry trade unwound itself in 2024. So the market's scared of the Japanese cash and carry trade reversing itself. The truth is that what's happening is it's doing it in a slow and systematic manner. And when I say slow and systematic manner, they're not raising interest rates by big amounts. They're raising them by 0.25 and 0.25 every couple of meetings, and they're doing it responsibly. And every time this happens, the market catches a bit of a fright, and then we just carry on going back up. So the Japanese cash and carry trade doesn't worry me one bit. Let's look at the next piece of FUD. The next bit of FUD is around Tether. Tether being the biggest stable coin in crypto, and it started off when S&P downgraded Tether. And they downgraded Tether because they said to Tether, look, Tether, you're carrying 5% of your balance sheet is sitting in Bitcoin, and you're sitting on a whole lot of gold, right? You're sitting on $12 billion worth of gold. And S&P said, that's not a one-to-one backed stablecoin. If you want to be a one-to-one backed stablecoin, you need to be holding everything in US government treasury bonds, because that's what you call a cash equivalent. Now here's the catch. Remember that I said to you before that the MSCI was being, the MSCI, which is a rating and index agency. Remember I said to you they were being weaponized to damage MicroStrategy. Remember I made that whole show on Crypto Insider, and I said to you that MSCI is being weaponized by TradFi. They are using the rating agencies to weaken crypto by downgrading MicroStrategy. The same thing's happening here. So S&P is downgrading Tether. Why are they downgrading Tether? Because Tether owns 5% Bitcoin and about 6 or 7% gold on their reserves. Okay, now hold on, let's just put that into perspective. Tether's 4% over collateralized. So they've got 4% more than 100% per USDT in circulation. And of that, of that 5% is Bitcoin. So if Bitcoin went down 80%, maybe they wouldn't be solvent. But you know what? S&P left out one thing, and that's what Paulo says here. He says, from the latest Q3 attestation, Tether will continue to maintain a multi-billion-dollar excessive reserve buffer in an overall proprietary equity group approaching $30 billion. He said Tether had $7 billion in excess equity above the 184 billion reserves. In other words, over and above the one-to-one, they had $7 billion in equity. But they also had $23 billion in company earnings on their balance sheet, which means that they not only are solvent, but they've got $30 billion in extra money. And the S&P made the mistake of not considering that thing. Now, S&P is not making a mistake. Let me tell you, S&P is not making a mistake. S&P is, number one, being weaponized like the other rating agencies were to attack crypto. Number two, the US institution is holding a gun to Tether's head and basically saying the following, and they're relaying the message to Tether via S&P. And they're saying the following: if you want to be a stable coin and you want to do well as a stable coin, you better be buying US treasuries. Because if you're not buying US treasuries, then we're just going to downgrade you because you're holding gold and Bitcoin. Remember that the US wants to dominate in stable coins. Why? Because if the US dominate in stable coins, then the stablecoin providers have to keep their reserves in treasuries. And that creates buying pressure for US treasuries. And this message by S&P to the market saying, hey, even though Tether's over collateralized, they've got 5% Bitcoin, but they've got 104% collateral on every coin. And they've got $30 billion on their balance sheet, which is the company profits. if you don't hold 100% US treasuries, then we're going to downgrade you. And if we downgrade you, that means that you basically can't really enter the banking system because no products can be structured around you. So you understand what's going on here. There's a very clear message being sent to all the stablecoin manufacturers or providers, but specifically S&P is the ratings agency which is being used here as the tool. It's very, very, very clear that the old establishment, the old guard, have basically got control of the old rating agencies. They decide what you invest in and what they don't invest in. And how do they do that? They give the things that they want you to invest in better ratings, and they give the things that they don't want to invest in worse ratings. And that's what happened here with Tether. They gave them a worse rating, even though the company has $30 billion in excess reserves on their balance sheet. And so this is a hit job. This is the same hit job that went on MicroStrategy. Remember on the 7th of July when we had that MicroStrategy hit job where people got these emails that basically downgraded MicroStrategy and said, you cannot use MicroStrategy as leverage anymore if you're at JP Morgan. You cannot pledge your shares as collateral. Why? Because they basically said you had to have a 90% collateral if you were going to leverage your MicroStrategy shares. But that was when MicroStrategy was at its all-time high. Look, that was July 7th. That was over here, July 7th. That's literally July 7th over here. Sorry, that's 2020. There we go. So there we go. That's literally July 7th. That's when this story came out. I remember.
All right. So some of the comments online, people are talking about some of the previous videos and the timing on JP Morgan. Okay, and when they actually increase the margin requirement on MSTR. So let's look at that, right? So I have an email here from JP Morgan on July 7th, okay? That is when they did a firm-wide increase in the margin requirement for MSTR. Now, let's look at that, right? So we have a chart here, right? And I overlaid the vol on that chart. Let's look at July 7th, this line here, okay? Now, on July 7th, the 90-day vol was going down between June and July. The 60-day vol is going down between June and July and continues to trend down.
When vol goes down, when volatility goes down, that means the share is more stable, and that means that more stable shares should get lower collateral.
Goes up for a bit, but now look, as they put this firm-wide margin requirement increase on MSTR, it goes up, but then it pretty much precipitously goes down, right? People had to liquidate that security.
So we think that JP Morgan started to attack MicroStrategy back then, but regardless of whether or not this was an actual attack, and regardless whether this MSCI announcement which was then published or pushed by JP Morgan was an attack or not, let's put that aside for a second and let's actually talk about MicroStrategy. And let's talk about what's going on with MicroStrategy, because there's a lot of FUD around MicroStrategy and whether or not they're going to survive, whether or not they're going to have to sell their Bitcoin, etc., etc. Someone says Elizabeth Warren messing again. I couldn't agree with you more. I just didn't want to say it because I want to keep the video on YouTube. So let's talk about what's actually going on at MicroStrategy. So the story with MicroStrategy is, as you can see, on the 7th of July, when JP Morgan published their reduction their requirement that they can't hold this as collateral, etc., the increased requirements, from that point, MicroStrategy has basically been going down. And it's been going down so much that it's actually trading it under its net asset value. So it's trading at under the Bitcoin that it has on its balance sheet. Now, just to give you some perspective there, right? At the peak, MicroStrategy was trading at 220% of the net asset value. And now it's trading at less than the value of the Bitcoin on the balance sheet. So the question is why? And the answer is very simple. For years, MicroStrategy had a promise. And the promise was that we buy Bitcoin, we hold Bitcoin, and we never, ever, ever sell our Bitcoin, right? You remember it, you've heard it 100 times. Everyone's heard Michael Saylor's promise to the Bitcoin community.
You buy Bitcoin, you hold Bitcoin, you support the Bitcoin protocol, you do not sell your Bitcoin for the first time in human.
So you buy Bitcoin, you hold Bitcoin, you do not sell your Bitcoin for any reason whatsoever. And every time that we heard Michael Saylor talking, he always said that he would never sell his Bitcoin. But then something changed. And I want to talk to you about what actually changed. In the old days, Saylor used to raise money by going to fixed income investors that invest in credit, and saying to them, look, if you want the upside of Bitcoin, but you want to invest in credit, then let me create a convertible note. And a convertible note basically says, look, you invest in my convertible note, and at some point it converts to equity in the future at a higher price. And so these fixed income investors that were used to getting 3%, 4%, 5% on their fixed income investment were going, hold on, you mean we can beat our peers by investing in this fixed income instrument that Michael Saylor created, and we can convert it into something which tracks the price of Bitcoin and moves faster than the price of Bitcoin moves? That's like the biggest arb of all time, right? And so what did they decide to do? What they decided to do was Saylor did that. But then Saylor changed the model. And the reason why Saylor changed the model is because all these convertible notes eventually had to convert. Either it would dilute the shareholders or either it would dilute the shareholders. By the end of the show, I'm going to give you guys such an incredible special that it's going to blow your mind. The developers are trying to put it up. I can see on my other screen that the developers are starting to put it up. So stay tuned until the end, because what I give you at the end of the show is a gift, because I wasn't here yesterday on Cyber Monday. I'm going to give you another gift today, which is bigger than a Cyber Monday gift. But hopefully it's going to be up by the end of the show. Actually, Adam, it will be up by the end of the show. Adam, get it up. Anyway, so Saylor, remember in the last bear market, there were tweets that said that Saylor could get liquidated if XYZ happens, and that was because he had a whole lot of debt on his balance sheet which was going to convert into equity. So what did Saylor do? Saylor created a new type of share class, right? And that new type of share class was what you call a preferred share. Now, what is a preferred share? It's a share that also gets a dividend, okay? So Saylor created a new way to raise capital, and the new way to raise capital was to have these shares, and I'll try and get us I don't know why, let's see why this is happening. So he created a new instrument to raise cash. Instead of raising cash using debt, he raised cash using these preference shares. Now the problem is that in these preference shares, Saylor started promising people annual dividends. If you hold the STRF or Strife, you get a 10% annual dividend. If you hold the Strike STRC, then you get a 9% annual dividend. If you hold this Strike, you get a 10% annual dividend. If you hold this one, you get an 8% annual dividend. And so Saylor started to promise people annual dividends. The only problem is that anyone who holds Bitcoin knows that Bitcoin doesn't generate cash. And so now the problem is that Saylor has a balance sheet which has a whole lot of obligations to pay annual dividends, but the only thing he's holding is Bitcoin, and Bitcoin doesn't pay annual dividends. So then the question is, where does Saylor actually pay these dividends from? He's only got two options. Option number one, raise more cash from people and use the cash from those people to pay the dividends, or sell Bitcoin. The only problem is that he said, we're never selling our Bitcoin. So if you're not selling your Bitcoin, then what you're admitting that you're taking my money to pay his dividend. Sounds like a Ponzi to me. And that's what the market's scared of. That this whole thing is actually starting to sound like a Ponzi. And eventually, what happened was that they actually came out. The CEO of MicroStrategy came out. Remember, Saylor's not the CEO. He's the chairman of MicroStrategy. The CEO of MicroStrategy came out, and listen to what he said.
Now, as we're looking at, Bitcoin winter, as we see our MNAV compressing, my hope is our MNAV doesn't go below 1. But if we did, and we didn't have other access to capital, we would sell Bitcoin.
But that would almost be a last resort.
That would be a last resort. And I think, look, there's the mathematical side of me that says that would be absolutely the right thing to do. And there's the emotional side of me, the market side of me that says, we don't want to really be the company that's selling Bitcoin.
So he's now saying, look, if we need to pay these dividends and the price of our share is below the Bitcoin holding, which, by the way, that's where the price is right now. It actually just jumped slightly up. Then we will sell Bitcoin. And the market didn't like that, because that means that this fortress that we have in MicroStrategy is no longer a fortress. They actually could start selling their Bitcoin to meet their obligations. And so then you have the biggest buyer in the market who promised us he'd never ever sell. But now what he's saying is, I'm going to sell. If I need to pay the dividends, I'm going to sell. That's what's going on in the market right now. And that's why the market got scared. And so I want to talk a little bit about this, because I think that any smart investor kind of realized that it was completely inevitable, right? So if you own Bitcoin, and on the other side, you've got these convertible, you have these preference shares, and these preference shares have promised a dividend. There are only three places that you can get the dividend income from. One is from the operating business. Strategy's operating business is not profitable, so that ain't paying the dividends. Two is you can get it by selling Bitcoin. And three is you can get it by raising money from, taking money from one person to pay another person. Now, traditionally that's a Ponzi. Like if I'm taking money from you to pay somebody else, that's Bernie Madoff. That's a Ponzi, right? But I want to talk about the difference between a normal Ponzi and this, because this is quite clearly a Ponzi. Let's not kid ourselves. Let's just call it what it is in English. It is a Ponzi. Michael Saylor is running a Ponzi. A Ponzi is that he's raising money from one person to pay another person. The only difference is that unlike the traditional Ponzi scheme, he's actually telling you exactly what this is about. He's saying, look, this Ponzi is backed by Bitcoin. And you have to trust that the price of Bitcoin will continue to go up. And if the price of Bitcoin continues to go up, I will be able to raise money at a higher valuation than the first person paid me. And I will use some of that money to pay a dividend. That's what it is. And for as long as the Bitcoin price goes up, there's no problem. But if the Bitcoin price goes down for a long period of time, and he can't raise money, and he's just paying dividends and paying dividends and paying dividends, then eventually they'll run out of the Bitcoin stash. So let's just call a spade a spade. There is only two places that he can get the money from. One, raising more cash, or two, actually selling their Bitcoin. Now, some people thought that they may sell Bitcoin this time because how were they going to pay the dividend obligations? But that's when Saylor came to the market and basically said, hold on a second. We raised $1.5 billion the other day. And instead of taking the $1.5 billion that we raised the other day, we took 1.44 and kept it in US dollars we kept 1.44 in US dollars so that we could pay the dividends that we need to pay in the next 2 years. They did this, they made an announcement. You can actually listen to a little bit of the announcement over here, which is actually quite interesting.
108 to 209 basis points. The market credit spreads are much higher. So this is very compelling credit. You're getting paid a premium to the model credit rate. And we calculate the spread premiums here, and they range anywhere from 412 basis points to 776 basis points. With our announcement of our USD reserve today, we've substantially decreased the risk in this credit model.
So basically what he's saying is, look, we raised $1.5 billion, and of that we bought like $11 million worth of Bitcoin or whatever it was, and the $1.44 billion that we still have left, we're keeping it in USD. And we're keeping it in USD so that we can pay our dividend obligation for the next 2 years. So what's Saylor actually doing here? Number one, he is telling the market, look, for the next 2 years, you don't have to worry. We can just carry on paying our dividends. But is Saylor actually preparing for a bear market? Is Saylor basically saying to us, hold on, this could be the end of the bull market. We're going to go into this 2-year bear market, and I need 2 years worth of dividend firepower to actually have so that I can pay all the obligations that I've got in the next years while I believe that the Bitcoin price is actually going to go down. I think it's a combination of both. I think Saylor wants to be in a position where the market leaves him alone for 2 years so that he can financially engineer and go and raise more money. And he's basically saying, look, I've got $1.4 billion, which I managed to raise on the open market. Ironically, he raised it on the open market at exactly the current share price at $180 per share. I think the current share price is $181 per share. So he actually raised $1.5 billion at the market, which is at this price, which means that investors actually saw value at this price. He raised this amount of money. He's keeping it on the balance sheet. And basically the show goes on. And so we know that for the next 2 years, he's got enough money to pay. And the next question then becomes whether or not Saylor is going to be able to raise more capital. And that's what I want to talk about now, because I think that this is quite an important thing, right? The MicroStrategy Ponzi and the MicroStrategy raising and the MicroStrategy engine was absolutely amazing. They own 3% of the total Bitcoin supply. They own $57 billion worth of Bitcoin. 3.2% of the total Bitcoin supply is actually held by MicroStrategy. And I tweeted the other day and I said, you know what? It's time. Michael Saylor was great. At the time, he was amazing. He invested $50 or $60 billion into Bitcoin. But I think that must now come to an end. And the reason why I think it must come to an end is not because I don't want MicroStrategy buying, but I don't like the idea that over 3% of the Bitcoin supply is held by one company with one board of directors who can actually we're now realizing can actually change their mind and decide to start selling, as you can see, right? So as you can see, Michael Saylor always said, I'm never selling. As soon as he had obligations to meet, the law requires him to sell whatever assets he's got to meet his obligations. It's not up to him. If you have an asset and you have a liability, you have to sell the asset to pay the liability. Otherwise, a liquidator walks in and says, buddy, I'm going to sell it for you and I'm going to sell it for you at whatever price that happens, right? Which is what happened to FTX. So I think that it's great that Saylor did all the buying. And it's great that Saylor got us into Wall Street. And it's great that Saylor did what he did. But he owns 3% or 3.2% of the Bitcoin supply. And if he carries on increasing this to 4% and 5%, you get what's called concentration risk. We get into a position where one company with one board of directors with one decision can press one button and liquidate all their Bitcoin. Imagine the worst case scenario. Saylor dies and a new board of directors takes over the company and they don't believe in Bitcoin as much as Saylor believed in Bitcoin and they make a decision to sell all their Bitcoin. Imagine you've got a seller of 60 billion now, but it's 5, 6, 7% of the total supply of Bitcoin. My feeling is MicroStrategy was great for Bitcoin back then, but we don't want MicroStrategy buying. We want other people buying. We want this instrument to go mainstream. We don't want what they call concentration risk. At some point, concentration risk becomes a negative. You know, like in the old days, we were very scared of Satoshi moving his wallet because he owns 1 or 1.5 million Bitcoin. Well, that's not very different from whether MicroStrategy owns it. Except we know now that with one decision, with one small gun to their head, they will change their view and they will actually start selling. And so what I want new buyers in the market. And we've got new buyers in the market. Remember Vanguard? Remember how when the ETFs launched and the CEO of Vanguard went onto public television and basically said, we're never, ever going to list Bitcoin. I got you the interview because I just think we should remember this.
Spot Bitcoin ETFs. Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we're not going to change our minds around this. Unless the asset class changes. Yep. Why? First of all, we don't believe it belongs. Like a Bitcoin ETF belongs in a long-term portfolio. Someone's saving for their retirement. It's a speculative asset.
That's exactly it.
And the funds that we offer invest in asset classes that actually have underlying cash flow. So, like we mentioned stocks, you're buying the forward earnings of a company.
That's right.
And that bond, right,
has coupon and principal payments.
Yeah, you're going to pay me back and you're paying me something for lending you the money.
Exactly.
Right, so they both can be valued. And that's, for us, we understand why they would rise up in a portfolio and the role they will play, and we can model them. Something like Bitcoin is just too volatile, and it's not a store of value. It hasn't been. And it's very volatile. When stocks got hammered in recent crises, Bitcoin went right with them. And so it is speculative, really tough to think about how it belongs in a long-term portfolio.
Yeah, well, that's what Vanguard said. They said it's really tough to know, and they'll never allow it unless the asset fundamentally changed. Well, the asset never fundamentally changed at all. In fact, the asset hasn't changed one bit. And guess what? Vanguard is adding crypto ETF access for their brokerage clients. Now, I mean, just to give you an idea of like how big this is, Vanguard is absolutely huge, right? So I did some work. I did look, and they've got $11 trillion under management with 50+ million investors, and now they're giving access on its brokerage platform. The brokerage platform is the distribution platform to crypto ETFs and funds. So why am I talking about this? Because, you know, I think that the market goes in cycles. I think the last cycle was the Michael Saylor cycle. And I think what we don't want is we don't want the next cycle to be the Michael Saylor cycle. I don't think that strategy is going to sell their Bitcoin. I think the Bitcoin are in very safe hands. And the worst case scenario is that strategy just hold their Bitcoin forever and just pay the dividends for the next 80 years. That's the worst case scenario. But I also believe in what Jim Cramer said. And I actually have to find you this tweet. And if one of the researchers is watching this, send me the tweet. And I just got a thing that's saying, let LFG for this crazy special that I'm going to show you at the end of the show. So I want to show you this Jim Cramer tweet. Now, again, I would never talk about a Jim Cramer tweet, but I actually agree with him here, right? So I think that Michael Saylor is an absolute genius. And I think that what he's trying to do now, there's so many people that are short MicroStrategy. That right now, MicroStrategy, I want to give you an idea of how badly hit the stock actually is. Okay, lowest NAV since 27th of March 2023 when SVB failed. Okay, consistently negative for 18 months. The peak was 229%. So that's how bad the shares performed relative to where we're at. And so I think what's going to happen is there's a lot of shorts in this share. And I think this share is actually going to bounce now. And so I've actually taken a position in MicroStrategy, a small position, but I've taken a position in MicroStrategy. And on that note, if you're looking for alpha, I've also taken a position in this thing called BNC, which is the BNB treasury company, because I read an article that CZ is actually trying to take over this company because he's not happy with how they're running the treasury company. So remember, you heard that first. You heard that first over here. Anyway, let's look at the markets one last time. We're going back to 90,000. I told you it's just FUD and it's going to bounce. There's basically no other way around it. I see a lot of people in the chat are saying, okay, tell us what this crazy offer is. So I just want to see if this offer actually works. Adam, can I click the button and will it actually work? Okay, so listen, I missed Monday yesterday, and I was supposed to give you guys the last opportunity to join Frontrunner for $11.99 a year. Now, just to give you an idea, that usually costs $2,400. And so I wanted to give you an opportunity to buy it at $11.99. That's the price that I wanted to give it to you. But because I wasn't here yesterday, and it's only happening for 24 hours, and I swear to you, I didn't ask anyone about this. $999 for a year. $999 for a year. It's usually $2,400. You've got 24 hours from now to sign up. And if you sign up, anyone that signs up today will get a free Bitfunded $10,000 account funded by me. So you have 24 hours. This special ain't going to go on above the 24 hours, okay? This is it. $999 for the year, and you get a free Bitfunded account. And for those of you who don't know what Frontrunners is, it's our private Discord group. It's where we hang out. Our researchers hang out there. I hang out there. It's where all the alpha drops first when we can't drop alpha on the shows. You're getting it for like $80 a month. Okay, it's only for 24 hours, and I cannot believe I've actually done that. Anyway, I'm out of here. I'm going to go to the Binance event. I'm going to go spend on my new... Did I mention to you I had a solid gold Kast card? Did I mention to you it's a solid gold? Wait, just listen. I'm going to drop it on my computer. Just listen. Did you hear how heavy that is? Like, did you hear how heavy that card is? I actually, I wonder what it's actually worth. Anyway, I'll see you guys again tomorrow. Until then, trade well, my friends.